Hello, welcome back my people to yet another video about quarterly theory and the importance of time, as you guys have been asking for and as I've mentioned in my Telegram group. Before I move forward, I want to appreciate once again each and every one of you. This channel has been growing exponentially, and your support, your comments, your remarks, feedbacks have been noted. I appreciate each and every one of you, and I take the criticism as well. So in this video I'm going to speak about the importance of time, and time only, not price. All right, because quarterly theory, it's simply based on time. And in this video you're gonna it's gonna be the same thing. It's gonna be a bit boring, so if you are easily distracted, once again I want to mention, do not watch this. And if you want to learn something, take your notepads and pen and pencil, and let's get started. Over here, the first point: why is time so important in trading? Why each and every one of the gurus and the books they mention always make sure you put time before price, but then they don't show how the application of that said statement, right? Over here I want to make sure one thing that you understand: time moves price to a predetermined location, i.e. a PD array, which means a time-based PD array. If you want to learn more about a time-based PD array, go to my playlists of Secrets of Time, and you'll find in that the video about PD array which are based on times, okay, which are high probability. So this is simply what time does. It delivers price from one place to another with predetermination. It has already been decided at what time, at what price range the delivery will happen. Okay, so the price delivery of next month is already predetermined. Price delivery of the next year is already predetermined. So this is the important factor about time, so you got to study it. So we have divided our days and nights into separate quarters to ease up time management and calculate hours, days, weeks, months and years, right? So if these same concepts, if we apply on the charts, it helps us filter out time-based points of interests. Time-based points of interests, people, I want to make sure you remember the time-based PD array, and removes FOMO, fear of missing out, and fear of losing or greed. All right, since time is fractal in nature, one missed opportunity simply opens up the door for another opportunity. Meaning, if one day on a Monday you lose a trade, or you miss out a trade, okay, and it just passes away, the trade just goes on, and you're not there to chase price, right? And it just goes on and it does not reverse to your entry, and then it leaves you. Well, since it is fractal in nature, time is fractal in nature, one missed opportunity or lost opportunity simply opens up the door for another day, another opportunity. You just wait for the next day, that's it. But waiting is the toughest part actually. So time being divided into quarters, it can be applied to a yearly, monthly, weekly, daily, 4 hour, 1 hour, 15 minute and so on. You can go to the 30-second time frame, the 15-second time frame, you'll find the same logic being applied. All right, so here we have the yearly depiction of the whole timed range, okay, and a whole year being a timed range in itself. January to March is the quarter 1, April to June is the quarter 2, July to September quarter 3, October to December quarter 4. All right, first quarter of the whole year, Jan to March, is the toughest one. You guys would have experienced this. If you are into trading, you guys would have understood that during the first quarter of the whole year, meaning these 3 months, I'm not saying the trade ideas do not occur, your setups do not occur. I'm saying it is the toughest one, which respects PD arrays, or it just goes back and forth a lot. So your trade ideas, your PD arrays are not respected. That's why the first quarter is the toughest one. Second quarter is the manipulation, the turtle soup. The third quarter is the distribution of the second quarter, and the fourth quarter is the reversal or the continuation of the previous cycle. All right, in this case we were distributing the second quarter here, but here the fourth quarter starts, we start to reverse. You can see first quarter accumulate back and forth, right? Price closes. Second quarter opens up, we manipulate above the quarter one, right? Distribute, redistribution again. Fourth quarter begins, reverses. The whole scenario reverses, and this also based upon the fundamentals of the whole world. All right. Here is the whole month mentioned in 4 different weeks, right? First week is the quarter one, second week is the quarter two, third week is the third quarter, fourth week is the fourth quarter, right? Third week, you can see I have always marked out the in red, because I usually look for my trades in this quarter. All right. So make sure you're noticing these things and writing these things down and understanding the differences in quarters. All right. Let's go. This is the whole week. This whole scenario is from Monday till Friday. All right. Monday is the first quarter, the toughest one, meaning the most boring actually. Second one is the Tuesday, second quarter. Third quarter Wednesday, fourth quarter Thursday, and Friday has its own functions. So Friday possibly can take out the highs and the lows of the whole week, or Friday can just simply continue or reverse the Thursday's quarter. All right. The Thursday's price action, Friday just copies it, or it just goes in the opposite direction. All right. I'm researching more on the functions of Friday, and I'll be posting a video about this soon. Okay. So just look at this price action over here. We have Monday from the high and the low of the Monday formed. In this case, we see the second quarter starts and the manipulation begins right there. This was a very low probability, and this scenario has a very least amount of trades, but still you can still find a lot of information in this one particular chart right there. We open up, manipulate above the Monday high, turtle soup, drop below, order block, OTE entry, we again drop below, rejection block right there, we drop below. These are occurring in the third quarter actually. Third quarter of the second quarter, third quarter of the third quarter, third quarter of the fourth quarter, everything. So you'll see that what I'm trying to say in the next few slides, but these are how the quarters are divided. Okay. First, second, third and fourth, Monday till Thursday. Friday does not count in the quarterly theory as it has its own function. Let's move on to the daily time frame. This is the whole day. Suppose this is Monday 6 p.m. till Tuesday 6 p.m. Okay. Asian range simply is the accumulation, and you can see below I have different quadrants of time into one quarter, different quadrants of time into another quarter, different quadrants of time over here, third quarter, and the same one over here. First quarter of the day from 6 p.m. till 12 a.m. midnight right there. From 12 a.m. till 6 a.m. in the morning is the second quarter. From 6 a.m. till 12 p.m. afternoon is the third quarter, and from 12 afternoon till 6 p.m. evening is the fourth quarter. All right. Let's go. You would mark the beginning of the quarters from 6 p.m. All right, 6 p.m. till 6 p.m. of the next day. And in Forex, it's 5 p.m. till 5 p.m. because Forex starts from 5 p.m. Let's move on to the next example. This over here is the Euro chart. I just to mention everything in a very efficient way, I chose this. So accumulation, first quarter, manipulation, second quarter, turtle soup, third quarter begins, we go have an OTE right there, and then the actual distribution begins, and then the fourth quarter it just accumulates once again. Now what do you notice over here? This is the true open. What are the true open? True opens are the openings of any second quarter of any given cycle. All right, this is the whole day cycle. This is the daily cycle. Second quarter of the day, the opening price of the second quarter is the true open. All right, above the true open you sell, below the true open you buy. Over here you can see we have the third quarter of the second quarter. Third quarter of the second quarter is the most important one. Third quarter of the third quarter is the important one. Third quarter of the fourth quarter is the important one. Any third quarter of any quarter is important. Over here you can see we begin our second quarter from 12 a.m. Price immediately starts to manipulate below. Fake manipulation right there. Okay, till when? Till the opening of this one second quarter of the second quarter right there. Price opens up, second quarter of the second quarter opens up. We expand higher up till when? The end of the third quarter of the second quarter right there. See, these major time stamps, these are the ones which are moving the price. You can see price is transferring itself, transacting itself from one place to another. One time stamp to another time stamp. From one time stamp to another time stamp. You can see another time stamp, another time stamp, here another time stamp right there. So true open right there, you sell above. Right there you see we have a turtle soup at the end of the third quarter of the second quarter. Manipulation, price drops below. Now a time based PD array, as I've been mentioning, this IFVG right there where my cursor is, it was formed when? Right at this time, the third quarter. This FVG which was converted into an IFVG, this is an IFVG right there. Price does not deliver above that one particular IFVG, and then we keep on dropping below and below, right? Time based PD array, guys. This right there, if you move backwards, this will always be also be a time based PD array, or there will be an SMT, a time based SMT. Okay, so make sure you're understanding this, because I'm delivering a lot of information in a very short span of time. Move forward. True opens. What are the true opens actually? So every cycle has its own true open. True opens are the beginning of every quarter two, like I've mentioned before. So true year open is the first Monday of April. True month open is the opening of second Monday of the month. True week open is Monday at 6 p.m. evening. True day open is midnight, as we all know, and these are the few sessions which you should be trading on. True open of Asia session 7:30 p.m. True open of London session 1:30 a.m. True open of New York session 7:30 a.m. True open of PM session is 1:30 p.m. All right. Over here you can see the premium and discount. True open, sell above. True open, buy below. Right. If we move forward, this is the whole idea of the quarterly theory. Actually, we have two scenarios in quarterly theory. You can see the first one, accumulation, manipulation, distribution, and X means the continuation or reversal of the previous phase, meaning this is the fourth quarter, right? And the second scenario is XAMD, meaning the continuation or reversal of the previous phase, then the accumulation occurs, then the manipulation, then the distribution is in the fourth quarter. Let me show you an example. Over here is the AMDX model right there. Accumulation, quarter one. Quarter two manipulates, turtle soup, drops below, OTE into the actual and final distribution, quarter three, and then we drop below. X in this scenario I have put as a reversal of the previous cycle. So we have a reversal of a previous cycle. Over here you will see a key level at a certain time, all right, turtle soup, and then we go in the opposite direction. Opposite direction of what? Of the previous cycle, of the previous phase or the quarter. Okay, make sure you understand we go in the opposite direction if the Q4 is a reversal in the of the previous cycle. So this is the first one, AMDX. Second one is the XAMD. Suppose the first quarter over here is the expansion. Okay, we've been expanding in the first quarter. Let's suppose this is Monday. This is the whole Monday range. Q2 is the Tuesday. Okay, Q2 will accumulate if the Monday range expands. it's it expands widely. And then the third quarter, meaning Wednesday, you will see a turtle soup during during the Q2 or Q3 of Wednesday. Okay, turtle soup price drops below, and the final fourth quarter is the distribution OTE, and then we drop lower, right? This is the XAMD. So basically this is the continuation or reversal of its previous cycle, meaning the Q4 of the previous cycle, meaning this is just expanding, possibly because we've been dropping below in its previous cycle. Now this new cycle began, we are expanding in it. Now if this expands, this accumulates, Q3, this one manipulates. If this manipulates, Q4 probably will distribute. Let's move on. This is the Gann setting, which a lot of you guys have been questioning and asking about. This is my setting, and like you can choose your own idea, but this is the whole scenario of the box which you saw in my videos. And this one right there, this box is the Gann box. All right, copy this and you can use it. And few of you have been asking for the indicators as well for quarterly theory. I personally use the DAI quarterly theory by Liquidity Pro, and if you choose this one, the indicator will overlap the whole screen. If you put it on your screen, the current chart, all you have to do, if you find it really ridiculous, just scroll on the right side. You'll see a scale of that indicator, the scale of your current chart and the scale of your indicator. Go to the scale of that indicator and just scroll on your mouse, or just shrink it a little bit, just like you shrink your chart, and the boxes will start to become smaller in sizes, so it won't overlap the chart prices. All right, so these are the indicators. Let's move forward. Here is the if-then principle. You would have heard Romeo speaking the if-then principle, meaning if one candle closes above, then the next candle will see higher prices. If a wick above, then the next will be lower prices, correct? In the quarterly theory as well, we have if-then principle. If quarter one expands, if the first quarter expands, quarter two is likely to accumulate. I'm saying likely. This is not 100% chance that it will accumulate, but there is a likelihood that it will accumulate. If quarter two accumulates, then quarter three will manipulate, and if quarter three manipulates, quarter four then will distribute. You understand the simplicity? Always apply the if-then principle. If quarter one accumulates, the opposite of this, if quarter one accumulates, then quarter two will manipulate. It's that simple, guys. It's that simple. Just make sure that you're taking notes. All right, here is the lower time frame scenario. Now I want you to keep in mind the if-then scenario as well. Okay, every quarter can be divided into 4 quadrants. We have 4 quadrants of this one quarter. So we have Q1, Q2, Q3 and Q4 of this whole quarter right there, and then the same scenario can be applied over to Q2, Q3, Q4. right? Now if this is expanding, the Q2 and Q3 of quarter 1 will act as major time zones or timestamps where you'll see price reacting from. Okay, so this one you have to make sure that you apply this on your charts, okay, from 6 p.m. till 6 p.m. of any day, and then every quarter you'll see on the box, just open up another Gann box and start from the beginning of the first quarter till the end of the first quarter, just overlap it. Okay, price is fractal, so is time. Q3 of every quarter plays a major role in price delivery. As I've mentioned, you'll see over here, price is manipulating above the accumulation during quarter 2, and then we are distributing right in the third quarter, and then again we are hitting the OTE right here the OTE during the quarter 3 of quarter 4. All right. Any PD array formed in Q2 or Q3 in any time frame, may it be yearly, monthly, weekly, daily, 4 hour, 1 hour, anything, is high probability. High lows, FVGs, order blocks, rejection blocks, fair value gaps, IFVGs formed in Q2 or Q3 are high in probability. All right. And always keep in mind the if-then principle. If quarter 1 expands, quarter 2 will accumulate. If quarter 1 accumulates, quarter 2 will manipulate. All right. If then, like this. Oh, so let's move on. Okay, here is the one. CRT in like integration with time. CRT combined with the understanding of time is really a game changer. This does not mean you'll be rich tomorrow. All right. Don't be a douchebag. Do not anticipate things, or do not expect things which are not possible. Be realistic and practical in your approach. It will not, it's just a confluence, which is a major confluence actually, right, which will help you understand the market in a better and efficient way. Okay. So verify every detail which you see in this video, as nothing is random. In this video, nothing I've mentioned is random. Even the depictions over here I've mentioned is not random. Okay. Imagine this to be a Monday range. Okay. Just forget that this is a 6 p.m. time frame or the whole day. Imagine this to be a Monday range, a whole Monday. Imagine this to be a Tuesday. Imagine this to be a Wednesday, and this one to be a Thursday. Monday expands. Let's go back to the if-then principle. If quarter 1 expands, which is Monday, what are you supposed to anticipate on quarter 2? Accumulation, which means it's an inside bar of the Monday range. If there is an inside bar of a whole range, the third candle will be violent and volatile, right? Third candle manipulates, meaning the quarter 3 manipulates during the quarter 3 or quarter 2. Make sure you understand this. Key level at always present at a higher time frame. Also a time-based PD array, of course, not any random PD array, a time-based PD array. If you want to make sure that you want to understand time-based PD arrays, you can check out my other videos. Okay. Turtle soup during the Q2 or Q3 of third quarter, meaning this is Wednesday. Thursday delivers up higher into the OTE of this range right there, and then distributes. Okay. If then principle, guys. If expands, first quarter expands, inside bar, which is the accumulation, turtle soup, which is the manipulation, distribution is the third candle. Right there. In this scenario is the fourth candle. So this is a very brief view of CRT along with quarterly theory. You can study and make up your own idea. Okay. Key points to which I want to mention before I finish up the video. Never rush into a trade if time is not right. Even if the trade gave you a 100 RR result, it was simply a gamble. Okay, and you cannot do it twice or 3 times or 10 times in a row. You cannot do it. Okay, if the time was not right, everything was aligned together, but the time was not right, then it's just a gamble. If one trade is lost, missed, or you lose in one single session, don't revenge trade thinking that today is the last day of the world. Okay, until time is present and the candlesticks are printing, you'll have another opportunity. This I have learned the hard way. I want you to learn it from theory instead of the practical, that adrenaline which you feel. I want you to learn it through this scenario, right? That's it. Don't be going into a rush. Okay, if you miss one, miss one. Don't just forget about it and look for another one. Quarters of time, secrets of time, is the highest confluence for any trading strategy, especially CRT. If you're trading CRT and you do not know these concepts, secrets of time or quarters of time, you're just pattern trading. Do not do this, have a critical mind and think critically for yourself, and understand time, understand the theory of time. All right, now this one right there, 1:30 a.m., 4:30 a.m., from 7:30 a.m. till 10:30 a.m. is the key times for PD arrays to form, sweeps to occur, turtle soups to happen, and FVGs to form. Okay, if you are noting down, this is the second quarter and third quarter of Q2 of the whole day. Second quarter, third quarter. This is the second quarter and third quarter of Q3 of the whole day, meaning this is the London session, this is the New York session. All right, and with this I conclude my video. And if you have any more questions about quarterly theory and how to apply these things into a real life scenario, I'm going to make another video, another a part 2 of this, so anticipate another video. All right, but whatever you learnt in this video, just verify it, back test it, go back into your charts and apply these whole ideas with your own critical mind. All right, do not just copy and paste everything which you learn. Have a critical mind and think of for yourself and for your future. So I'll see you in my next video. I thank you all for bearing with me, having the patience to listening to me, and if you have not subscribed yet, I suggest that you subscribe. All right, so I'll see you in my next video, and I hope you have a good trading week next week. Good luck and good trading.